slightly in the red for the market. The Sensex and the Nifty down about 0.2%.
The Nifty is now down to levels of 17,700, 150 points gone on the Nifty.
Then 100 points cut at the moment, 0.63% down.
Looking a little sideways from the morning, and I think it's lackluster, right? I mean, not very much going on.
Whatever volatility we had was only in the first 1 hour of trade, and thereafter it was, a pretty flat line on the Nifty. By the end of it, closing exactly around that 17,750 mark, a cut of close to about 0.5% on the benchmark indices.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. Dalal Street closes largely lower as metal stocks weigh on Indian indices. Nifty and Sensex fall over 0.5%, but the broader markets outperform, with the mid-cap index soaring close to 1%. Vodafone Idea shares rally after the government becomes the single largest shareholder in the company with 33% stake. Street believes the move is a near-term positive for Vodafone Idea, but long-term issues remain. Bank of America says the company needs capital infusion of at least $6 to $8 billion to remain competitive. Adani Group swings into damage control as stocks remain under pressure. Promoters to prepay loans worth around 8,000 crore rupees to release some pledged shares of Adani Ports, Green and Transmission. Renowned valuation expert Professor Damodaran pegs the fair value of Adani Enterprises at 945 rupees per share, which implies a potential 40% decline from the current market value. SEBI seeks the latest beneficial ownership details of the foreign portfolio investors onboarded as bank clients from designated depository participants. Sources say FPI depository participants must provide the information by September 30th or risk losing their registration. That's the CNBC-TV18 exclusive. M&M Financial jumps over 7% after a strong third-quarter performance that saw assets under management rise 16% and gross NPA ratio at a 15-quarter low. The Street also cheers the appointment of Raul Rebello as Managing Director and Chief Executive Officer designate. Meanwhile, Paytm rallies as the company turns profitable at the EBITDA level for the first time ever, ahead of its forecast. All right, well, those are the top stories that we're tracking this evening. Here's a lineup of what we have in store for you. It's a packed show as always. In Market Opinion, we have Venugopal Garre, who is the MD of Bernstein. And in Big Voices, we have Nirmala Sitharaman, Finance Minister, commenting on Vodafone Idea. All right, well, on to the first story for this evening. The day's market action. Dalal Street ended largely lower as metal stocks remained a major drag. Nifty and Sensex fell over 0.5%, but the broader markets outperformed, with the mid-cap index soaring close to 1%. Prashant Nair is here with a wrap.
It was a bit of a give-back session on the Nifty. The market started weak. It saw occasional bounces through the course of the day, but never really recovered fully. We ended down on the Nifty about 80-90 points, 0.5%. Banks did a little better, as has been the case for the last few sessions. The Nifty Bank was down about 1/3% or so as compared to what the Nifty did. Metals, IT and energy were the three pockets which saw the maximum amount of selling pressure in terms of trades. Let me sort of dive straight into stocks. So the cuts came through from earnings-related disappointments and otherwise as well. Divi's, for example, was one of the top losers on Friday. It lost another 4% today, making it, a heavy two-day loser. JSW Steel, Hindalco, Tata Steel from the metals and mining space were down, and Infosys from the IT space was the top IT Nifty loser as well. Gains coming through in Adani Ports, which surged quite a bit, 10% after Friday's surge as well. There is, of course, the incremental positive news flow there with regards to promoters releasing a substantial portion of the pledge, which will happen in the coming days, as the official release points out. Indices was higher, and there was BPCL, which did well as well. In the broader markets, cuts coming through in names like JSPL, MCX, Piramal Enterprises, JK Tyre, GE Shipping. As I said, a mix of earnings and otherwise. And gains, again, M&M Finance and Paytm earnings related, Indus Tower on the back of rub-off from Vodafone Idea, Varun Beverages, Zydus and Aarti Industries, a few others. I think the global markets once again become a little important after the shockingly strong numbers, jobs data out of the US on Friday. And we got a long lineup of Fed speakers, including the Fed chair, who will speak. And I think we will wait to hear if there is any pushback to market pricing after the very strong numbers there. The Nifty is stuck in a range. On the upside, the 20-day moving average comes into play. And on the downside, the 17,353 budget day lows act as a bit of a reference point as well. Back to you.
Okay, all right, Prashant, thanks very much for that. Well, in market opinion then, Venugopal Garay of Bernstein says that the results season in general is not a driver for upgrades this year, adds that the banking sector will be cautious in lending to the private sector.
From a point of view of certain sectors like industrials, even one of the larger companies essentially had a margin miss, for example. So it's all over the place outside of this, no unique trend per se. So all in all, I would probably say this result season in general is not a major driver for upgrades. So I don't really see much of a change, post these numbers. And neither is it giving you any directional trend for turning, incrementally positive. Private sector capex is not really was expected to be great anyways this year. We were thinking it'll probably start looking good in 2024, 25-ish, years, calendar years. But the reality is at this juncture with what we have seen in the last 2 weeks, I think the banking system will be generally a bit careful about lending to private sector, especially, if it is linked to infra. That is a reality. So the heavy lifting has to be done by the government, right? So, even though private infra expenditure is not that great, but it's still an incremental contributor, right? So overall, I would probably say it's neutralish to negative from an infra point of view relative to expectations when we head into this year.
Okay, well, moving on to the other big story, the union government is now the largest shareholder in Vodafone Idea. The government owns just over 33% of the telecom company after converting adjusted gross revenue dues worth more than 16,000 crores into equity. The Vodafone Idea stock rallied in trade. However, analysts say that while the move is a near-term positive, Vodafone Idea needs billions of dollars to arrest the loss of market share. Reema Tendulkar is here with the details.
Finally, some good news for Vodafone Idea. After over 1 year, the government has given the go-ahead to convert 16,000 crore of AGR dues into equities. Let's start off by telling you what this means for all the players. For Vodafone Idea, this is a big near-term positive, a big sentiment booster. The government now appears to be committed to the cause of Vodafone Idea, the future of Vodafone Idea, and now with an implicit sovereign backing or a guarantee, Vodafone Idea can go to the banks, raise some money or refinance their existing loan. Dues to vendors can be repaid. Vendors like Industars or even ATC. Remember, Vodafone Idea's proposal to issue 1,600 crore of debentures to ATC Telecom was also contingent on the government approval coming through. Remember, no fresh money is being infused into Vodafone Idea. But as BofA says, Bank of America, that it would free up some cash flows for Vodafone Idea. This, coupled with a potential capital injection by promoters, timing of which is unknown, should help Vodafone Idea clear pending dues of tower companies, vendors, and also invest in 5G. Now, for Industars also, this is a very big positive. Now, Industars has been writing down the receivables from Vodafone Idea for the last 3 quarters. In fact, last quarter, Industar posted its maiden loss because of the write-down of the receivables. But now with the Vodafone Idea perhaps being able to repay Industars, the receivable risk comes down, which is why Industars is rallying in trade. For Bharti Airtel and Jio, this is a near-term negative, because as BofA says, the current government move drastically reduces any risk of Vodafone Idea going into NCLT, and the pace of incremental subscriber gains from Vodafone Idea could also reduce. And in case anyone was pricing in a duopoly for Bharti and Jio, that is unlikely right now. That said, the road ahead for Vodafone Idea isn't going to be very easy. BofA says, according to their channel checks and discussions with vendors, tower companies, Vodafone Idea is significantly underinvested in fiber, 5G and core telecom infrastructure. And it would take Vodafone Idea at least $6 to $8 billion of investment to narrow the gap with peers. This means the company will need to raise external funding to kickstart 5G. External funding could be from investors. It would also mean promoters may need to pump in some money. Remember, peers are already racing ahead with their 5G rollout, but Vodafone Idea is yet to get started when it comes to 5G. And finally, the elephant in the room when it comes to telecom companies are the telecom tariffs. Telecom tariffs will be needed for a long-term sustainable pickup in Vodafone Idea's cash flows.
Okay, all right, Reema. Thanks very much for that. Staying with this story, let's also listen in to what the finance minister had to say on the government's move.
उनका डेट को हम नहीं ले रहे, वो जो सरकार को देना है,
ड्यूज की बात कर रहा हूँ।
हाँ, वो सरकार को जो देना है वो सुप्रीम कोर्ट में चलते, वो सब होने के बाद और कैबिनेट के अप्रूवल लेने के बाद आप कंपनी हमें जो हमारी ड्यू है वो दे नहीं पा रही हो इस कगार में, इसीलिए हम कंपनी का शेयर ले रहे हैं, मतलब कंपनी में हिस्सेदार हो गए हैं, जिससे व्हेन कंपनी कमाई बढ़ेगी हमारे अपने भी मिलेगा।
Okay, well, moving on to the third headline today, Adani Group swung into damage control as the stocks remained under pressure. Promoters will prepay loans worth around 8,000 crores to release some pledged shares of Adani Ports, Green and Transmission. Vivek Iyer is here with more on this story.
Well, that's absolutely right. So, in a press release that came in from the company, some very important details coming in, stating that the Adani Group promoters have actually posted almost $1.1 billion in order to reduce the percentage of pledged holdings in 3 of their group companies, and this is going to be ahead of the expected maturity, that is September 2024. So now, 3 group companies will see the percentage of pledged shareholding by the promoters come down. And when you're talking about Adani Transmission, the promoters are looking to reduce the pledge by close to 1.4%, in Adani Green almost by 3%, and very interestingly in Adani Ports by 12%. Now what is more interesting is the fact that, especially if you're talking about Adani Ports, where they're looking to reduce their proportion of pledged shareholding by 12%, the total percentage of promoter holding pledged at the end of the December quarter was only close to around 17.3%. So a significant chunk of the pledged shareholding is being reduced. When it comes to Adani Green Energy, 3% out of the 4.36%, and when it comes to Adani Transmission, 1.4% of the total 6.6% pledge will be reduced.
What I see in this business is a company that invests in infrastructure investments, which have long gestation periods, require huge capital expenditures upfront, and are not that profitable. It's the nature of the business. So when I approached the valuation of Adani Enterprises, that's what I brought to the game. I had to bring in the fact that this is not a business that can generate 30% margins or 40% margins. You're going to be lucky to get to 6 or 7% margins. The global average for infrastructure companies is about 4.8 to 5%. So at 7%, I'm already pushing the limit on what those margins will be.
Okay, so the news continues on the Adani Group of stocks. We need to take a break now, but stay tuned. We'll be back in a jiffy.